Hello friends, today I'm going to show you how I'm analyzing the market and what I think of the S&P 500 to be in the next months in a short period, medium period, and a long period. Please remember, I'm not a trader advisor. This is not a trading advice. And please read carefully the slide hereafter. So for that case, let me share a timing solution, the tool that I'm using. Okay, now for the prediction, I will use a few models, the long models, the weekly and daily models of both model G and model J, the new model, and also a combination of long and short models, which I will call long short. I will also show you how I'm using the out-of-sample technique to check if there is a potential inverse. And let's start. Okay, this is S&P 500 loaded until today, 29 of May. So the LBC here, the learning border curve, is on the rightmost point of the price. Now, in order to predict, I will check first the long-term prediction. The long-term prediction is the long model I'm using here on the right from 28th of May. Okay, I'm putting it here. Now, let's zoom out a little bit to see. It seems that it's the right direction because the last 2.5 years were very much an uptrend in a high pace. And now I will check myself. I will put the LBC 5 months before here on 1st of January, and I will plot the model from the beginning of the year, 1st of January, the long model. And I can see that this long model is about the same direction. So I assume that the direction of the long model is downwards. So let me leave only the 28th of May here and return to 28th of May here. And let me explain what is the meaning. The meaning of this downward direction of this model, the long model, does not necessarily mean downwards in the price. It means that the high pace acceleration that was 2 years from until now is coming to an end. And from now, it can be that the price will go sideways, could be going a bit downwards, or even a bit upwards, but not in the same pace as it used to be. That's the meaning of that long cycle. Now, let's look on the model G. Model G is in blue here. Model G from 25 of May here, the weekly model. And I see that the model caught the downwards and now the upwards and is actually pointing the continuation of the uptrend until around September. Now, this is not enough for me to decide if this is the right direction. In order to be more accurate, I will put also the daily model of the G. Okay, and I can see that the daily model of the G model caught these turning points quite good. Okay, now I want to make sure that I'm on the right direction. I will also use the model of the J model here on the 25. First, the weekly model J here. Oh, this is the daily model. Oh, this is the weekly model of J. And I can see that this model caught the turning point very accurately. And now it is pointing up until 3rd of June. From 3rd of June, some corrections until around 27th of June. And from there, an acceleration towards September or even October. Now that's good, but I want to make sure that I'm on the right direction. In order to do that, I'm taking here the out of sample strategy, and I will take 1 month before. I will run these models 1 month before, which I already did, so they are here. So I'm checking first the model G here from the 1st of May is here, okay? And I can see that from around this area, the model should start to go up. And indeed, I'm on the right direction. I'm looking here on the out of sample. And also I'm looking on the daily model of the model G, the blue one. And I see that it is quite good. Let's take aside the models that were run from the 28. This is the model G from the 1st of May, and I see that it is actually in the right direction. Now, what is my concern? My concern is that this area here is a potential inverse for the whole prediction. I will paint it here. This area might be um, an inverse. And what it means inverse? It means that from here, instead of going up, the price may go down as follows, like this. How can I make sure? Well, there are a few options to make sure. First of all, let me check if there are any such twist also in model J that is run from 1st of May. Model J from 1st of May here. Okay, in the model J of 1st of May, I do not identify twists that may indicate inverse directions, but I will leave them anyhow. Okay, so what I can see here is that the model J is in the right direction from 1st of May. Let me add the model J from 25 May here and here. So they are in the same directions. Let's leave the 28th of May. And then let's put also the 28th of May from the G model here. Okay, so we are here on the 28th of May, and this is how the prediction shows. What it means here is that the overall, if we zoom out, the overall trend in this year will not be an acceleration up, but instead maybe sideways. And the sideways will be such that it could go up until the 3rd of June, go down 27th of June. From here, it will go up until the area of mid-September. And from mid-September, we should look for signs that the direction is going down again. And so from that point, the concern is that this model is showing the inverse direction. And for that purpose, as a customer, what you get is not only this view, but also the inverse view. so that in any time, if there is an inverse, for example, around here, and the price start to go down instead of up, we know that the inverse is valid, and the inverse will take us from here, from mid-July to September until November and maybe December, and we will have to check again. Another indication which I want to show you is the combination of the long and short model, which I'm calling long short. Okay. So if the long is as follows, the long short is very similar. Let's put the long short from the 28th of May here. Not this one, here. Okay, what we can see here that the long short, which is in green, is following the red and is showing a downtrend, okay? Downtrend direction in a long run. Just to make sure, again, that this model is in line with the model that was run in January, I will also put the January model running here. And I get almost the identical model. I can see that the model from January, which is this one, caught very well the high point here, the change of direction here, the high point here, and the low point here, and is going up now. And then I'm expecting a reverse towards the end of the year. So now I have two options. I have an option to believe the green one, or I have an option to believe the blue one, with the option that there may be a change of direction. So I have the two options here. There are similar in the change of direction points, as you can see. Here, 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 here. Every date is a potential change of direction here. And there may be a combination between them. So it means that the price may, how can we know? How can we check ourselves? We can see that the first point up here with the J models and the G models is around 2 or 3 of June. And if this point is up, then we can expect a downtrend until somewhere on the 27th of June. If, in any case, this point turns to be high and not low, then we know that we have an inverse here, and the blue and the velvet may be going down. So I hope you caught my technique of predicting the market, both for long-term, mid-term, and short-term, and how I'm using the inverse models to catch the potential of inverse cases in the price. You're welcome to go to CyclesTrader and try whatever price instrument you want to try and order your own prediction. Remember, this is not a trading advice. Thank you.